listening to Houston Real Estate Radio. Last segment, you heard from Dr. Jim Gaines, real estate research economist over there at Texas A&M University. And, he brings up a lot of great points. We talk about a lot of great things with the economy, what's going on with Houston. And when we kind of left with home prices, we're going to talk about inventory next. But if you've got a real estate question, you can always call us at 844-788-9444 and have your real estate questions answered right here on the air. 844-788-9444. And of course, if you follow us on Facebook, you get a lot of information that way as well. All right. So, Dr. Gaines, let's go back into inventory, because we know that housing inventory plays a huge role in home prices and how long it's going to take to sell your house or to find a house to buy. So how is Houston doing on inventory of homes?
Well, actually, the overall statistic, what we call the month's inventory, how long it would take to clear the number of listings, the total number of listings based on current or the average of the last 12 months of sales, has crept up to about 3.6 months as of the end of May. And I say crept up because the trend has been, it was down as low as about 2.4 back about a year ago or so. And so it has kind of progressively come back up. And that's on the overall total number. Interestingly, we've been doing some research into that too, and we're looking at the inventory by price levels, by different price intervals. And where the inventory, of course, is the tightest and is actually less than 3 months, is in the lower price categories, really under 150 or under 200,000.
Yeah.
Those markets, and we were just talking about the entry-level buyers having trouble, and one of the problems they've got is finding a house in that price category that they want to buy. And incidentally, that includes condominiums as well.
Yeah, we have some people who are qualified over at Registered Real Estate Advisors. I have agents who have people qualified for $150,000 and less, and for months they have been looking for houses. And they put offers on, I have one client, they put 5 offers on 5 different houses, and they haven't gotten not a one of them. And that's pretty discouraging. Yeah, there's just not enough houses in that price.
What we haven't said, Shannon, is the quality of some of these houses. Quality in terms of physical quality in terms of location, the classic filtering down of houses as they age and the neighborhoods age and they become less valuable. Generally, that's where those houses have been available, and that's simply not happening, particularly if you're inside the urban area, inside the belt. Maybe even now inside the Grand Parkway is going to be considered almost close in. But what we're discovering, too, is everybody's been talking about the really high-priced properties. There's lots of inventory there.
Yeah.
The $1 million plus market, I think, is over 12 months now of inventory based on the pace of sales and the number of homes listed in that price category.
That's what we were talking about, the HRER MLS meeting. They're over 12 months for some of these luxury homes now. That's a long time to have to wait to sell.
And some of the luxury homes, the rate of increase in the pricing is a lot different as well. Most people don't get too concerned if what used to be a $5 million house can only bring 4.5 now. But it's true that with the longer market days on market that it takes to clear, it's a little bit tougher to find those buyers. Because for one thing, if a buyer is looking for a multi-million-dollar house, their first choice is generally to build what they want.
Right.
If they can get the location and the lot, which is the other side of the coin.
Right.
So it's a mixed bag. But that entry level, or even the first time move up market, the anywhere from about 200 to 250, 300,000. That's getting to be a kind of a tighter market too, and more difficult. The dominoes don't fall as well as they do in a traditional housing market, where everything has to go back. If I want to move up, I got to sell the house I'm in, and then that person has to sell the house they're in, and that person has to sell their house they're in, and that's been disrupted.
Why is that? What has caused that disruption? Because it used to be that We used to be able to say, this is how long it's going to take a house in general terms, across the market. Now it's like you said, the market's segmented at different price points. What has caused that disruption?
The concentration of people wanting to buy in the middle price ranges, the lack of construction for about 3 years, which had a cumulative effect of not adding to the supply of housing. Okay. Houston is still building lots of houses, but because we had about 3 or 4 years where construction was down, it's tough to catch back up. Okay. Then we've had such an explosion of population and jobs for 4 or 5 years. We're still feeling the effects of that. That momentum that was built, built up during those years. This year, I think, is that year when that tidal wave is kind of easing out. So, for example, our statistics are showing so far for this year. We thought this would be a little bit more of a down year, but we're up about 3 or 4%. It's not a great deal, but a lot of people thought it would go down. But it's still holding up. May was a good month. Sales in May were up about almost 9%. Prices are beginning to kind of balance out. They're kind of evening out. We're not getting the 7, 8, 9% increases, at least across the board. Now, in some neighborhoods, yes, but it's across the board kind of leveling out and flattening out just a little bit.
Across the state, what are still the hot areas across the state for buyers and sellers? Dallas
and Fort Worth, they're going gangbusters. The Dallas market, we've done research on it. The Dallas market is much more tied to the national economy. Okay. It's a correlation of like 0.92. As long as the national economy is doing reasonably well, it buoys up because Dallas's employment base and economic activity base is very much mirrors the U.S. economy in terms of diversification and so on. So that area is still doing well. Houston, of course, the correlation in Houston is about 0.75. That's that difference of the influence of the energy sector down to Houston. So Dallas, Fort Worth doing well. Austin is still doing very well. San Antonio is actually still doing very, very well too. Prices are up and sales are up over in the San Antonio market. And that's always been sort of that slow, steady market over there.
Yeah. Now, Austin's a unique market because they have so many rentals because they've got all the legislative folks who rent a lot. And then they've got all the college kids who rent a lot. Right. So it's kind of a different market than the rest of the state. How are they or are they impacted by oil prices at all?
Not much. Okay. Not very much. That's their correlation there to the energy industry is not nearly as much. University.
It's just different because they have more rentals. Of course, has moved in. Silicon Valley discovered Austin a few years ago and still continues to move in. If you go over there, about half the people you talk to, it seems like, are from California, which has also triggered their housing market tremendously because. Anybody coming from California to Austin to buy a house, they're just amazed at how much house they can buy for the money relative to the California market. So, big Texas house.
It's very market over there. Yeah. And Austin is not. Austin has not had that boom of home construction. So again, that supply-demand balance is way imbalanced to the demand side, keeping home prices going up at a pretty good clip.
You think rental prices are going to continue to inch up?
Yep.
Just going to keep going up.
In Houston, the rental market is probably going to level out. You can talk to any of the developers. They're going to finish the projects they've got under construction. But it'll be interesting. Next year, we'll probably see a pretty good cutback in the number of apartments being built until or unless they're pretty sure of the foundation there for their tenants. We've still got, though, a strong population base of that under 35 age group that's still going to be heavy renters. As we're saying, the entry-level buyer is having trouble, which means they're renting.
The entry-level buyer is really in their 30s now, right?
Yes.
That's the majority of them. Yeah. Okay. All right. Well, we appreciate great information from you. Love talking to you. You always bring us great information from the College Station area over there at Texas A&M. And I know you guys do a lot of hard work with the Real Estate Research Center, just keeping up with what's going on across the state. So we sure appreciate the hard work y'all are doing.
Thanks, Shannon. It's always a pleasure to be with you.
Thank you. All right. We appreciate you guys at home listening to Houston Real Estate Radio. And if you've got a question, you can always call us at 844-788-9444. And of course, you can always catch us online at HoustonRealEstateRadio.com.